I'm gonna ride
Ride
it
it
all
all
night
night
long.
long.
Whew, whew. My goodness. Ups and downs, ups and downs. Crypto, here we go. Haven't been here for a little while, but I'm very happy to be back with my brother Tom, my intelligent brother Tom, web programmer. And what's your title? I forget your titles again.
I'm a marketer and a programmer, Peter. I
That's
can
right,
deal with
marketer
talking
and
to computers or human beings alike.
programmer and marketer Tom Hartman is going to be here talking about Bitcoin and crypto yet again. El Salvador, the real reason they accept Bitcoin. Now, I know I'm saying that title like I know the real reason, but I don't. I'm about to find out just like you. My name is Peter Hartman here at
I'm Tom
Jumpstart
Hartman,
Live.
and
Yeah,
you're listening to Sacred Prophet Daily.
no, you don't. You don't step on. This is the only part where I get to speak. Okay, in the next half an hour, it's going to be you. This is where I get to speak. Okay, I'm Peter Hartman, motivational speaker and consultant, entrepreneur here as a host for Jumpstart Live. You know, we started this out as peers, Tom and I as peers talking to the world, but now I'm just a host, a moderator here for the discussion that Tom's going to have. But it's absolutely wonderful because I'm super eager to hear what it's about. So let's not waste no more time. Let's jump right into it. Actually, before we jump into it, I'm supposed to do a real quick check, make sure everything's good. We're live. What it's about. So let's not waste no more time. Looks good to me. Looks crisp. Tom, I'm looking at Bitcoin right now. It's lower today than it was yesterday. And it's lower yesterday than it was the day before. And even lower than the day before that. So I'm selling all my Bitcoin, all of it. And I'm no longer a believer. Max Kaiser was wrong. Peter Schiff was right. Time to buy gold. What's happening, Tom? Is the world coming to an end?
Well, I mean, as a caveat, I sold my Bitcoin too, but because I'm a dirty short-term trader, and I'm like, oh, if I could buy it little bit lower, that'll be great. But I have every intention in the world of buying some more, and it was hurting me for a clip there when it was bouncing, when it was going up. I was like, oh no, because that's what you don't want. You don't want to buy high and sell low, and one of the rules you have when you're trying to trade is that if something's going up, you don't chase it. So you got to hope that it crashes. So I'm like, hey, this is great. I wouldn't mind if it crashed even more. But I'll tell you, what's been bothering me over the last quarter or so, 3 to 4 months, is this idea: why is Bitcoin going down? Right?
Mm-hmm.
We heard all the claims. Bitcoin's going to be 100,000 by the end of the year, 200,000. That's a conservative estimate. It could be $1 million, and blah 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 blah. And I was like, okay, I mean, I'll buy a train ticket for that. I'll buy a lotto ticket for that. But it just kept going down, and people were like, "Oh, okay, it's because of China ban Bitcoin and is putting a crackdown on that, or there's regulatory concerns with Tether or something like that, and maybe there's not as much liquidity there as we thought, or whatever. GBTC ETF is being unlocked, or every reason under the sun why it should be going down." But these reasons sort of existed before, and it didn't affect the price. So what's going on? And finally, Peter, it started to click into my head what's going on. So just as a framework here, I'm gonna have to give you a little crash course in global macro. Right, global macro is basically when you're doing any trading or investing on a, and you're not investing based on a particular company. You're investing based on a country or a business sector or a style factor or something like that.
Yeah.
So you're not buying Facebook stock. You're buying tech stocks. You're not buying a specific Exxon Mobil oil. You're buying the oil sector. You have to make decisions that have to do not with the fundamentals of a given company, the CEO, what their free cash flow is like, what kind of earnings they have, that sort of thing. You're making decisions based on global trends, right? So what's going to be, if you're trading oil, what's going to be oil demand over the next 3 to 6 months, depending on what the time frame is that you're trading. How will green energy affect oil production? What will governments do in the face of higher gas prices versus lower gas prices? These are all global macro concerns.
And is macro a better way to trade or to evaluate the market? Is that the way? Because a big picture sounds to me like, oh, that's the way to do it. Why go micro when you could go macro? Is
So it
that the way?
depends on who you are, because depending on your temperament, you might be like, oh, I'm in a macro trade, but a macro trade might last 3, 6 months, a year, 3 years. And if
Hmm.
you're one of those people who puts on a trade and is looking at the value of their position every single day, well, then one day you might be down 20%, and you might sell, even though you have an idea, a thesis, a global macro thing that you're trading that takes 2 years to play out. And so your temperament doesn't offer that. Global macro, the data points that come out, the information that comes out to update your the market as to what's going on comes out. If it comes out weekly, that's considered fast. It's usually monthly, quarterly, or yearly. So you can imagine having to wait. Imagine having to wait 6 months before you know if something's moving in your direction or not. But the global macro is where the big money can be made. It's hard to swing for the fences and hope that a GameStop happens and you make 10 times your money on a trade like that. That's difficult to do. But to do a 10x trade on global macro, it's not unheard of. It can happen more often. But I think it's important for global macro for our audience, not because I'm expecting you to trade specific oil stocks or gold stocks or whatever, depending on what governments are doing. It's just
Hmm.
it really helps you understand how what the economy is like. I really want people to understand that the economy is the flow of money, right? The commerce, the flow of money within a system, and it's the flow of money in the system in the same way that the flow of energy and oxygen within your body that helps determine the health of your of the system. And so, if you don't have the money flow, there could be a lot of money in one area and not a lot of money in the other. And some people might be like, "Oh, the economy is very healthy in the oil sector, but very weak in the lumber sector." And you go, "No, no, no. Both oil and lumber work together in the economy in order to affect, let's say, house prices or where people decide to live and stuff like that." And so
Hmm.
global macro gives you a way of anticipating some of the positive or negative catalysts that might be occurring in your own personal life. So understanding this can allow someone who's fresh out of school or and wants to choose what career they want to go in or like what job they might want to go in. It might determine where they might want to live, right? It might determine what salary they're going to be aiming for or what their savings rate might be for the next 5 years or whatever it is. Should they have a kid or not? All that sort of stuff.
Just want to let everybody know, if you're watching this right now or after the fact, we are actually in our Telegram group, Jumpstart Live, over on Telegram. You can join the Telegram group. I'll post the link in the chat right here below. If you have any questions, any comments, anything you want to say, you can post it there. We'll give priority questions to there. If you want to know more, if you have any information, anything that piques your interest, Tom is always available to answer your questions. We've got Luke who's watching right now, who's talking about ETFs. Are we talking about ETFs today? Is ETFs part of macro at all?
Yes, absolutely. So let's say someone wanted to invest in the oil sector. If you didn't want to deal with there's different types of security instruments that you can trade or invest in.
Hmm.
And
Yeah.
so a lot of that stuff is out of the hands of your average person. However, an ETF is sort of like a stock that tries to bundle together all the different securities in a given sector or style or whatever it is, and allows you, Peter, to go into your brokerage account or call up your broker and tell them, I want to buy the oil sector, I want to buy the tech sector, I want to buy the commodity sector or whatever. And ETFs are, allow you to do that. Great vehicles that allow you to get exposure to things you might not otherwise have access to.
Makes sense.
What I want to bring up here, the reason I'm talking about global macro is that if there's one thing in a country or on the global scale that matters beyond anything, that always matters, it's the currency of that country. Currency is at the basis of all the transactions that occur. And so you can imagine that the exchange rate of currencies between nations or the value of a currency at any given point in time is extremely important. So if us here in Canada, if our dollar is weak versus another country, that country is more likely to buy our things. So exports become better. And if our currency is strong, they're more likely to sell us stuff because they want more of our strong currency to convert to their weaker currency. And so the currency matters a lot. The of any given nation, and the one currency that matters above all is the the dollar, the American dollar, because the
It's
American
the
dollar is
reserve currency of the world.
the reserve currency of the world. That's exactly right. Why
That's
why does
right.
that matter? Well, Canada uh, and Russia uh, might not trade specifically. I mean, they do, but let's say they didn't trade specifically. Or let me put it in a different way. The US dollar is the currency that, a la base, everyone has to accept. If you want to pay off a debt, um, or if you want to incur a debt somewhere else, you're allowed to do that in uh, the US dollar. And that makes it great. With the whole world using the US dollar, it makes it so that Venezuela and China and Canada and United States and England can trade with one another, knowing that they have this one currency that has an exchange rate that everyone's following. Versus the exchange rate between Canada and England will be different. Will fluctuate a lot. Will fluctuate depending on what both countries are doing. If we denominate it in U.S. dollars, then regardless of what Canada is doing or England is doing, we can still transact with a currency that
Hey,
is
let's denominate it in
remaining stable.
Bitcoin, all right? Why are we denominating things in the US dollar, all right? Okay, I don't think I need Joe Biden being involved in my denomination, all right? Nothing
Well, it's
against
very
Joe
useful.
Biden except he's a human being and Bitcoin is a god.
No,
Bitcoin is
it's very
Jupiter.
useful.
Hmm?
Look, beforehand you had before you had whenever you don't have a world reserve currency, and that's happened several times, people have to deal with baskets of currency. Like it was normal for people to have 3, 4, 5, 6 different currencies on them or in their accounts, and they just use the one that they wanted to, depending on what the exchange rates were and stuff like that. So um, that puts the onus on you to make sure that you have the right currencies and that you're making the best deal. Someone else, someone might insist on or swindle you by asking you to pay in a currency that they're getting a better exchange rate on. If you don't know what the exchange rate is,
But wait,
well,
wait, wait.
then you're
Before the US dollar was the reserve, couldn't we just peg it to gold?
yeah. So gold used to be the reserve
So
asset.
it's not the US dollar or a basket of currencies. It's a
No,
US
but
dollar,
before
a
gold,
basket or gold.
before gold wasn't always the world reserve currency,
Hmm.
world reserve asset. Just like oil wasn't always the reserve asset.
Oh, I
There
see.
used to be, before you had that sort of global trade,
Mhm.
when Rome was doing business with uh with other nations, well, it was a basket of currencies. You had different currencies that you're trading back and forth.
Gotcha,
Um,
gotcha. Okay, so how does this relate to El Salvador?
okay, so the dollar, inflation, you can understand. People go, inflation exists when the dollar is going down, and deflation exists when the dollar is going up, right? The dollar going down, that's something you probably heard a lot of. The dollar is losing its value. The dollar is losing its value, so everything is going up in price, denominated in dollars, and Bitcoin is too. Inflation is the thing we want to hedge against, and buying assets and buying digital assets like Bitcoin allows you to safeguard your wealth, right?
So inflation is when there's too much, when there's more money in the money supply, and deflation is when there's less money in the money supply, or is there something else?
Well, inflation is when the money supply is increasing, and deflation is when the money supply is decreasing.
Gotcha.
And so it doesn't matter if it's a lot of money or not a lot of money. What matters is what is the amount of currency floating around versus the amount of productivity that country is generating.
Mhm.
This is why counterfeiting dollars is illegal, because if I print $1 billion and then I start using that money, even if it looks exactly the same and no one can tell it different than than the other currency that I'm copying, then eventually the prices in the economy start to rise, because without anyone needing to know specifically, the economy understands that there's more money circulating, and so prices raise to account for it. Because when
Yeah.
I'm buying a chair, that chair is the value of a chair divided by all the money available. That's the
Tom,
fraction. The chair is represents a fraction of productivity in the full productivity of my country. And so, if the money supply increases, then it says I need more dollars for every unit of productivity.
The trick, Tom, is to not be greedy. All right, you print less than 10,000. The banks, the FBI, they don't care about it at all. You can print as much as you want. Just keep it to $9,000. This is a smart way to do it. I'm not saying I did this. It's just if I did do it, OJ style. If I had done it. So, Tom, El Salvador, I want to know right now, is Bitcoin doomed? Like, is this El Salvador a good thing, a bad thing? Okay, tell me the good stuff. You're saving this stuff till the end, and
Well,
I want to know right now.
the idea that everyone has, or a lot of people have about El Salvador, is that the reason they chose Bitcoin, they accepted Bitcoin as legal tender, which means to say that you can't. Bitcoin's not taxed in their jurisdiction. You're allowed to pay your taxes in Bitcoin. People have to accept Bitcoin as a settlement of debts. If you wanted to pay someone in Bitcoin, they would have to accept it. And the idea here is that countries are going to start to adopt Bitcoin as legal tender because inflation is such a big problem, and Bitcoin allows them to prevent that, to offset that, and that's what I thought too. Now, if that's the case, then why wasn't that a big boost to the Bitcoin price? If all of a sudden now billions of dollars are going to be flowing through here, why wasn't the market discounting this and increasing the price of Bitcoin?
Yeah.
And then you start looking into El Salvador and you start realizing that they didn't have their own currency. Like they do have their own currency, but people don't use it. They haven't used it in 20 years. They have a dollar denominated country. Literally, they have accepted the US dollar as their currency.
Mm-hmm.
So this is not like a Venezuela or an Argentina situation where they have hyperinflation and they're trying to stop that by introducing sound money. This is a country who already had the world reserve asset as their base, adding Bitcoin. Well, the reason they're doing that is, well, actually, play that video from Jeff Snyder and Emil Kalinowski from Eurodol University. I'll prep it before you set it up. These are Jeff Snyder, who'll be the guy with the empty plaques on the wall behind him. He is a brilliant investigator with the financial markets. He's called like a financial plumber. He understands the weeds of these things, and I'm going to let him explain a little bit why El Salvador decided to use Bitcoin as legal tender. You can pause it whenever you want if you have any questions.
Are you going to
I'll tell you
explain
when to stop it.
why there's empty plaques behind this dude? I like his style already. I want to do this empty plaque thing. It's pretty good.
One day.
Why does it look? I got the wrong window here. This is no bueno. This is no bueno.
You're setting up a fractal structure there.
All right, let me click the right thing here. Share audio. All right, let's do this. Empty plaques, you say? Ah, there they are. All right, so I'm playing it, and I should stop it when?
I'll tell you when.
All right.
It'll be about 4 minutes. You can pause whenever you want to, though.
Gotcha.
They did it. And El Salvador, I can also see why they did it, as you explained, but this isn't the first time we have seen this mistake. Time and time again. For 200 years, we've seen cycles of globalization, and the same story plays out every single time. Back when the United States was an emerging market, you see advanced economy money centers have a surplus of money. They send it overseas. Something goes wrong in the advanced economy money center. It's not the emerging market that trips a wire. It's something in the advanced economies, London, Paris, Vienna. They say, something's not right. Let's pull our money back. And they withdraw it. And that's happened time and time again, at least 6-7 times over the last 200 years. And so, that's just the last 200 years, the modern economy. If we go back in time, when we did in episode 79, part 3 in early June, we talked about how something similar happened in the 14th century, ghost money, how there was a bullion famine in Europe. And so what did enterprising individuals do? In the absence of sufficient access to acceptable money, clever private participants will do whatever they have to in order to continue conducting commerce as best they might. That's really the point for money. It's not itself wealth, rather a tool that a free market capitalist system might better create true wealth in the form of sustainable commerce. And here we are again. El Salvador's looking to Bitcoin as a ghost money way.
Yeah, it really is. Cryptocurrencies are a form of ledger money in the exact same method as this ghost money that showed up in the 14th and 15th century, which is simply, in the absence of bullion, hard currency, they decided, well, we'll just keep a common ledger and write down who owes what based on what they created these ideal forms of money, like an ideal form of pound sterling or Flemish silver, and said, this is how we're going to price goods based on this ideal currency, and we're going to keep track of who owes what on this ledger that we'll all keep together. And what is crypto? I mean, what is blockchain other than a distributed ledger? That's exactly the same thing. And I think what's going on, especially in Bitcoin and other places in the crypto space, is this misconception. People have this idea that cryptocurrencies are there, and they've come about and they've proliferated and succeeded because of money printing. Dollar's going to crash, and they pile into these currencies, buy them up because they're trying to protect themselves and use crypto as a store of wealth. When in reality, it's this ghost money. The reason crypto is proliferating, come about, and really had success is because it's filling a very, very different role. And that different role is elasticity, money shortage. The Fed isn't printing money, which is exactly the problem. We see the Fed doing these QEs because the system is short of money. The QEs are a Fed response, and a very poor and ineffective one, to this monetary shortage. And in the modern 21st century, here we have people all over the world, including now at least one government, that's saying, we have a dollar problem. We can't get enough currency. We're going to turn to other forms of currency to try to create some form of to get some elasticity,
right, stop me here.
so that our economy doesn't completely go into the toilet.
All right. I know exactly
idea here-
what you're going to say, Tom. I know exactly what you're going to say, okay? It's not inflation, it's deflation, okay? We have a lack of dollars, and they should be printing a whole but more. But because they aren't, people are going into Bitcoin because that's a distributed ledger in which we can have some ghost money.
So
all
let's
right?
get back to this
okay?
El
End the
Salvador
podcast.
idea here, okay? Let's get back to this El Salvador idea. So why would a nation who's not experiencing inflation want Bitcoin as legal tender? They're not trying to fight inflation. Their problem is that because their economy is denominated in US dollars, they need US dollars in order to pay their bills, both sovereign and local, and to settle debts. They need dollars, but they can't get enough of them. They were begging the IMF to give them a $1 billion loan because they realized in their accounting that they were going to be short of dollars. Well, what are you going to do?
Okay, but hang on. When you're short of dollars, what does that look like? Like what's the problem of being short dollars? Doesn't that just increase the value of the dollars that you have? Or because it's not their own currency, it can't work that way?
Well, it's like if you borrow a cup of sugar from me, and then I go, fine, but you owe me a cup of sugar back. Well, if you don't have that sugar, you got to go find that sugar somewhere else. If you go, well, no, I'll give you salt instead. Well, no, you said you're going to give me sugar. So now you got to go find sugar, but you might have to pay more to get that sugar
Because it's not enough.
to give it back to me because it's not enough. So it increases the value of the currency, but increases the value of the currency that you don't have.
But wait, when I borrow the cup of sugar from you, and can't I just give you back the cup of sugar that I have, or whatever I did with that cup of sugar? I used it. I converted it to an equal value.
No, but our debt is in sugar. Our agreement is that you will give me back a cup of sugar.
And that's the scam, folks. That's the scam, all right? There's nothing wrong with dollars, except you don't control dollars, all right? Dollars control you. The revolution!
Well, there's two big issues here. One, everyone thinks that the central banks or at least the Fed, the central bank of the United States, is printing an obscene amount of money, right? The thing is, they are not. They are not printing an obscene amount of money.
What, 20 trillion is not enough?
Well, if they were, why would the dollar right now is, if you're going to compare it to Canadian dollar, or let's just call it the dollar index, the lowest point, the point at which the American dollar is worth the least amount of money is in 2008 or 2009 during the global financial crisis. Call it 75 cents on the dollar. It was worth 25% less than, let's say, than the Canadian dollar. And today, it's up. It's like a 93 or whatever, 93 on the DXY. So what that means is that the dollar is actually expensive now. So if they're printing the most amount of money they've ever printed over the last 15 years they've been doing this, how is the dollar up? Well,
Which is what we were expecting, right? That's what we were expecting. We were expecting it to crash down, right? Everybody's buying gold. Everybody's hedging their bets because you're like, there's no way the dollar could survive. Right. But even though they printed all this money, the dollar...
Not only did it survive, it went up. Gold went down. Because what's going on is that prices can go up for two reasons. It can go up, as we said at the beginning, because of inflation. The amount of currency increases, and then the economy adjusts to the amount of money that's in the system. Or you can have there's a scarcity of dollars. So if you run a business, let's say you run a condo or whatever, you have some business, and you're used to getting a certain amount of dollars in, and so you're used to getting $500,000 per year, and so you price your products accordingly. But you're realizing it's harder and harder for you to get dollars, not because there's too many dollars in the system, but because it's not enough. The amount of dollars there is not enough. It's not circulating enough. It's these bottlenecks that we were talking about before. And you can't solicit it, but you still have your own debts that are denominated in dollars. So now you have to in order to get more dollars from people for the same amount of things that you're selling, you have to increase your price so that you can get more numbers of dollars. If you get more dollars to pay what you need to pay, because what you need to pay is in number of dollars. It doesn't care how much money is in the system. If it says you owe this amount of money, that's the amount of money you owe. And if you can't sell any more goods, you have to increase the price of those assets. But that's why we have this divergence in the economies of the world. It's not everything that's going up in price. Yeah, food, shelter, energy is going up in price, but actually not even energy recently, but whatever, let's call it energy goes up in price. But technology has been decreasing in price. Wages have been going down. Like, there's a bunch of things that have been going down in price, right?
Are they not supposed to go down, or they are going down naturally?
Well, whenever you have a divergence in inflation and deflation in a society, where you have some sectors go up in value, in nominal price, the dollar amount price, and others go down, it means it can't be a generalized inflation. Because if it was a generalized inflation, all the prices would go up. Even if there was a natural tendency of some sectors to go up and other sectors to go down, they would do that. Both of them would go down. So they would all go up proportionally, but they're not doing that.
This is not like stagflation or whatever that's called?
No, stagflation is when you have no growth and high inflation. And that's, if you want, I can talk about that. But that's basically where the amount of money has been issued into the economy to try to generate growth, but there's no growth. It's sort of like, prices go up, but earnings are not going up and pays are not going up and stuff like that. That's not what we're talking about over here. We're talking about sectors are divergent. Some sectors are going crazy up, like houses are going through the roof and stocks are going through the roof. Assets that maintain their value or that are valuable to as a store of wealth are going up, but other things are going down. So
are they going up because people need more dollars? That's why it's going up, or are they going up because they're more valuable?
They're going up because the people who own those assets require more dollars for them to let go of it. But they don't require more dollars to let go of it because they think it's a bunch of inflation in society. They require more dollars because their own costs have gone up. And they might think that their costs have gone up because of inflation, but they've gone up in that sector, in that area, because there's bottlenecks of money. There's bottlenecks of pay. That's where you have this weird rich get richer, poor get poorer divide, because the poor people don't have access to the assets that go up in value. So you can have a poor person who has a cell phone that's generated for them more productivity than a person 50 years would have had, but they're making less money. How could they be making less money if they have more productivity?
Because
if there's more money in the system. And
'Cause
then you have
it's
assets that are
pooling.
going insanely high in nominal value, but they're not producing any more productivity. The house is still the house. Why is it going up?
Okay, Dom,
It's
I
because
want
this
to
is
hear.
bottlenecks of money within the system.
Sorry for interrupting you. I want to hear you explain very clearly the premise of this video, the real reason El Salvador accepts Bitcoin. But before I do that, first I want to say thank you to this comment, Marvel. He posted this comment here. Hi, Peter. This is just to me, by the way, not to you. Hi, Peter. Just for me. I may not say much or ask questions, but I absolutely love watching the show. Again, he's addressing this to me. Yourself and Tom, oh, he put Tom in there, but just to be kind, are refreshing to listen to. Love all the great ideas, motivational talks about the coin world. Y'all are doing great reaching and teaching. Uh, Teaching. Thanks for all the helpful info. Marvel, thank you so much. That's so kind.
Thank
My
you so much,
goodness, I
Marvel.
appreciate it. That's really nice. That makes me feel warm inside. Put a feather in my cap. I know you have to throw in Tom in there just to be nice, but I know you're talking to. Thanks so much. Tom, you got me thinking, like, it sounds like you're making the best case for my boy Yang over here, okay? UBI. Could start sending those checks out to people, man. If you want to reduce the gap between rich and poor and make it more fair and get those dollars flowing, you're not going to be able to get it from the Jeff Bezoses of the world, okay? These guys going to space with his money, all right, man? That thing's not even going to be on planet Earth anymore, okay? We got to send out checks to people. We got to start getting those checks in the mail. We got to start spending those money. Prices will go down. UBI.
It's not going to work. It won't work, buddy. What would happen is that the money that the people get, they would spend it, and because of the bottlenecks in the system, the money would get sucked up into where all the money is.
Just print more money. They give people $10,000 a month. Okay.
All that would do is make the assets go up in value, and the money wouldn't actually circulate within the economy. This is what El Salvador is trying to.
How? So you're telling me it's impossible for the U.S. government to print enough dollars?
Let me ask you this.
That the system is so corrupted that it'll all get sucked up?
Someone who's living paycheck to paycheck, right? And who might have, let's say, $50,000 in debt. If they were to get $12,000 in a year from UBI, where would that $12,000 go?
To their debt. Well, I mean, if they're $50,000 in debt, let's just be fair, it's going to go to Nike. It's going to go to a new Ford F-150. And another credit card.
Excellent. So the money that goes into the debt disappears, right? Because it goes to pay off debt. That's a black hole. It disappears. That doesn't get recirculated into the economy. The bank does not want you to pay down your debt. That's the last thing the bank wants. I had this conversation.
Okay. So we'll just wipe out everybody's debt and then we start off fresh.
Okay, great. So we accept that the money that goes to the debt, that money black hole disappears. Sorry.
I'm getting to Tom now. He's getting all flustered and confident because I'm right.
The money that goes in the debt, that would disappear, right?
Yes, that goes in the black hole, disappear. It's like a minus, plus, and cancels out.
Let's say the person doesn't have a debt, or like you said, they buy Nike, they buy an Apple computer, they buy clothes or whatever.
Where does that money go? Pools of money goes to the rich people who just keep it. Yeah,
that's right. Because that money, a certain percentage of it goes to pay the wages of people who made it, and a bunch of those jobs are not even in the countries in which they're spending the money. But let's say there's some of it that's there, but the majority of it goes to pay down company debt, to buy back shares, to invest in assets, all of these things completely out of the reach of the people who bought those products.
I know the solution. I figured it out.
Yeah.
A digital dollar, you send it to people and they can't pay their debts with it. They have to use it for other things. Huh?
Like what?
Bread? I don't know, like what, Tom, you're describing an impossible situation. You give people $1 million and all you're going to do is pay off all their debts, buy assets, and get sucked up. You're describing a doomsday dystopian reality. Does Bitcoin fix this?
Yeah, it does, but in a different way. So what this means is that it has nothing to do with Bitcoin's not going up for inflation. I sort of see it now in four phases. Bitcoin goes, so if you imagine 4 different scenarios, there's the Bitcoin that goes up because the price of Bitcoin is, or any asset, is matching the value that it actually provides. The price is indicator for value. It goes up for there. Then that momentum or can cause a hype cycle. Now Bitcoin could go up because of hype. People are buying it not because of the value that it provides as a store of value, but because they're trying to get rich. They're trying to turn $1 into $2. Great. So then there's that speculative phase. Then that phase stops, and then you have the price come down because the hype is gone. Right? If you bought something and the value proposition was that it would go up in value and you could sell it higher, the moment it stops going up higher, then you have to sell it because the only reason you had it was that it was going to go up. And then the number of people who sell it increases as more and more people go, well, this is not, the value proposition to have it would go up. So we talked about first level, it goes up because of value. Second, it goes up because of hype. Third, it goes down because of hype. And third, it goes down because of value. Now, that third leg down in Bitcoin is the where the value of this coin, where now we're not sure. The price is trying to find what the actual value is. All the speculators are out. All the hype is gone. Now it's got to refine what that value is. And when it does, it could start this phase again. But the thing to pay attention to is that it's gone down. One of the reasons it's gone down, even after this El Salvador win, is because the market, the economy understands. They don't want to understand it intellectually. The market is an aggregate of all of our behaviors, understands that El Salvador has accepted Bitcoin because it needs to boost its economy. It needs more commerce. It needs more interactions. And it needs something as a conduit to circulate between everyone without the sucking thing where the dollars all get sucked up to the main assets. And so what Bitcoin is telling us right now is that when you see Bitcoin go down in value, understand that there is a liquidity issue. There's the amount of currency, money moving around in the system. There's a problem, right? And when that problem is, let me put it a different way. When the problem shows up and it's like people are finding it difficult to get dollars, actually Bitcoin goes up. And when it's easy to get dollars, Bitcoin goes down. Bitcoin is solving the problem of I can't find US dollars, so I can't find dollars. I need something else. I need this.
Whoa. Are you telling me that if there are enough dollars that get printed, Bitcoin will go down?
Well, technically, it's if people feel like there's enough dollars.
That's even worse.
Yeah. So the idea is that the more money printing that basically, if the dollar goes down in value, then Bitcoin should go down in value. And when the dollar goes up in value, which is what people think is opposite, deflation, why would Bitcoin's going to go up? It's going to go up because Bitcoin is solving the problem of there not being enough money in the system.
Will they ever create enough money in the system? Do you think they can solve this problem? They can't?
No.
Gray skies are gonna clear up. Put on us. So Bitcoin's going up because they can't keep it down. The dollar's going to keep going up. Yeah. DXY, baby, got to watch that.
Exactly. I think that Bitcoin is going to keep going up because we're in a system that is just there's not enough money circulating. Forget about this people who are rich or not. I'm talking about the balance of money. The money is not circulating within the system enough. And in order to get around that, cryptocurrencies come up, which makes total sense. Why do we see helium as a cryptocurrency in order to incentivize the monetizing the surplus Wi-Fi that people have? It's because if in a healthy system, money would have been there to incentivize people to sell their surplus data or their surplus Wi-Fi in order to do that. But it's not. So cryptocurrency had to be created. Why is there cryptocurrency for Rally in order to help monetize people's the videos that people are doing online or the interactions they're having on Twitch or whatever? It's because money wasn't going there, and so a cryptocurrency is solving that problem. But this issue of new money, this ghost money being created in order to actually create allow for commerce to occur has happened even before crypto. It's just that crypto has made it in the digital space. But it's an idea as old as money.
So, Tom, this is the reason I like Bitcoin. Because it does away with that pesky thing we call human nature. All right? Human nature is the flaw in the system. It's humans hoarding money. It's humans deciding monetary policy. It's humans is the problem. Bitcoin makes it so that it's a ledger that's kept not even by a human, and this is the only way we can move forward. Because if we rely on politicians and the Fed or central government or central banks or whatever it is, they'll never be able to get it right. Their incentives are too skewed because they're human, right?
That's exactly right. And the system, if you have assets, you are completely incentivized to continue the system as it is because your assets will naturally go up in value. And if you don't have assets, if you're poor, then you will always end up being poorer and poorer and poorer, but you have no power in order to change the system. So the system will naturally crumble, but it won't. It doesn't look like it'll crumble because of inflation. It looks like it'll crumble because of deflation.
Look, I'm going to give you the space that you need, the silence in this moment to digest what Tom just said. Tom, if you have anything more to say, I got a few questions for you. I got a bunch of questions for you. I don't know if you have time for it.
Well, the only thing I would just add on there to button what I was saying is that now the question is, whenever you see a leg down in Bitcoin, some of that is going to be speculation that's gone, but another one is we're trying to find what the right price is for the given moment. And so don't be surprised if Bitcoin heads down lower. It'll head down lower as long as it seems like everything is fine. It should head down lower, and it should head up higher once it looks like, oh shoot, there's gonna be a problem. And right now, it looks to be like we're at the point where it's the end of everything is fine, which is might see another leg down to Bitcoin, and oh crap, things have really hit the wall. There's all kinds of signs that are showing up that says we're about to get into this phase where Bitcoin could really go through the roof.
Put that little button on there. Tom, what you've described to me, for me, is a win-win scenario, all right? Bitcoin goes down, buy more Bitcoin. Bitcoin goes up, you got more value for your Bitcoin. You've said before, I think you've said it before, certainly Max Kaiser said this, that the dollar price associated with Bitcoin is not a reflection of Bitcoin, because Bitcoin has its intrinsic value. It solves a problem, and it always will solve this problem. That the dollar amount, the nominal amount that Bitcoin is running for, is more a reflection of people's faith in the current system, faith in the monetary policy, faith in the dollar. And whether it goes up or down, it's not a reflection on whether Bitcoin is good or bad. It's just a reflection on where people are at. So you, as a person, as a flawed human being that you are, look, Tom, he likes to trade. All right. I'm cool, just set it and forget it.
You prefer slots. That's your
no. I'm a crock pot.
bag.
Okay, I'm a crock pot. You just put the ingredients in there. You set it. You don't even have to think about it. Tom's constantly checking the stove. Then I put enough water. Is the heat on high enough? Look, if you got your Bitcoin, you hold on to your Bitcoin. You'll be happy with your Bitcoin. Okay, you might be happy in a month, in 6 months, in a year, 10 years. Who cares? All right. Who cares if gold goes up or down in value? It's gold, people, and it's digital gold. All right. So you're describing a scenario where we don't got to worry. The real reason El Salvador accepts Bitcoin, if I understand correctly, correct me if I'm wrong, please do. There's not enough dollars to go around. And they need their commerce to work, baby. And then they don't need to get some dollars that then disappear and then they can't pay off their debts. They need something that gets their economy moving, and that's out of out of the old way and into something that actually works. El Salvador is using Bitcoin because they need dollars.
Exactly. In fact, and then an environment that has inflation, like steady inflation, the last thing they would want, or even high inflation, the last thing they would want is for Bitcoin to be there, because then Bitcoin would be this release valve and might have everything get repriced to where it should be, which is lower. And so you wouldn't want that. You want Bitcoin in places. So I should pull up a list of like, where are the countries that have U.S. denominated, that their currency is the U.S. dollar, and those countries should be more likely to actually jump on the Bitcoin bandwagon. But take that as a sign. Like when you see Bitcoin price goes up, Be careful in the economy. I just want to caveat what you were saying with the whole Mike Kaiser thing. The value of Bitcoin is not just the perception of people. It's consider it. It's either, depending on what phase you're in, it's either Bitcoin trying to find a price that's commensurate with the amount of money that's missing in the system. Like what would you pay for an asset that is helping you deal with the money shortage? That's basically what that price is. Or it's the hype. Sometimes the price goes beyond the value of it, and you're in a hype phase. Basically, if you hear about the Bitcoin price in the news, you're paying for hype at this point.
Yeah, but I mean, come on, you're the one who told us that the volatility of Bitcoin is not a bug, it's a feature. It's desirable because that's what's going to allow it to do these swings. If we knew what the price should be, then there would be no energy.
Well, now with this understanding, I would say that the volatility is giving us an indication of just how clogged up the system is. If the system wasn't so clogged, like the money is just not circulating well enough, that sometimes it's a flood of it, and sometimes there isn't, and sometimes there's a flood, and sometimes there isn't. Imagine someone having aneurysms and heart attacks all the time. Bitcoin wouldn't be that volatile. It would be like a comic book or a painting. It would just find its price. But cryptos ended up being, it's almost like it's this release valve for the volatility in other parts of the market. So maybe I would modify my thing to say it's a feature in the sense of if you're looking to turn $1 into $2 in a shorter period of time, well, you need volatility for that. But as far as what it's actually showing us now is the health of a system. It's the chaoticness of the EKG. It's the more volatile. When you see Bitcoin sleepy and quiet and slowly going sideways and down, then you should know everything's fine. Go buy the S&P. But if it starts going volatile, it will go volatile before the regular market does because it's picking up on that. At that point, you can sell your.
Look, forget the S&P. Go to NFTs. Go to tokenization. Invest in the future, folks. But I understand what you're saying, Tom. If somehow a bunch of countries or the world decides that we're going to go in Bitcoin, the Bitcoin standard, they're going to adopt the Bitcoin standard.
That's never going to happen.
I'm just saying, like hypothetically, if they did this, would the price of my assets go up or down?
The price of inflationary assets would go down, and the price of value assets would go up.
So I don't have to worry like that my house or my land or whatever will be worth less if Bitcoin becomes the new god.
It depends. If your house is always worth one house, and if we're talking about, so it can never go down in value because that's what it is. If you're saying how many of a currency you can get for it, and you're like, all the other currencies are gone and Bitcoin's the main standard, well, everything is going to be repriced in Bitcoin. So even if your house goes down in nominal amounts, well, everything else is also going down proportionally. So what difference does it make? Well, it's the Bitcoin standard. Everything will change, adjust accordingly. It won't just be in.
So it's not something you have to worry about. It's not something that.
It's not something you have to worry about it because the Bitcoin standard will never happen. So that's why you don't have to worry about it.
Get out of here, Tom.
Well, it doesn't make any sense. What makes more sense is that cryptocurrencies, different ones, get created for different networks, and stable coins allow us an easy, frictionless conversion of one network to another. That way, you can earn money through how you're behaving online, through your work, through side things that you do on Etsy or what have you. You generate the different currencies within the wallet, and then you can pay, some of your TV watching time credits get to pay for your food. Like, why wouldn't you have something like that? And then you could have competing cryptocurrencies for different networks, and those who manage it better, who provide better perks or whatever it is. But
isn't that like having a basket of cryptocurrencies? Isn't that exactly what you said was not good? Don't we want the equivalent of a dollar standard?
I didn't say it's not good. I said that in the past it caused friction because you had to figure out what the exchange
Yeah,
rates
so
were.
people are not going to want that, even when it comes
No,
to a
but
basket of cryptos.
with a technology overlay, then it becomes a stable coin, or whatever it is, an exchange rate between these different ones. You'd have different. You'd have an app or whatever you decide to use, some sort of financial institution or whatever that handles the balance
So
of the
wait,
off of different currencies.
isn't the stable coin like Tether part of that human flaw? Like, isn't Tether like some scary thing now that you
No,
shouldn't
but even
invest
if you
in?
don't have a stable coin, even if you just had uh, exchange rates between helium and bat and whatever it is, like you can have just exchange rates between them. It's just that those exchange rates could be managed by an AI wallet that always balances off your currencies to the best price, and then you wouldn't have that friction.
All right, all
But you'd
right.
have the possibility of having more of your productivity that people have right now that it's not being monetized, actually monetized. The Bitcoin, one of the best things about Bitcoin, and even Michael Saylor would talk about this, is how slow it is, how unchanging it is. It's sort of like land,
But
right?
that's part of what makes it appealing. Like, how are you going to get institutional money to go something extremely
Well,
volatile? It's
how are
got to
you
be
going to pay for
slow and
something?
reliable.
Who's going to buy a cup of coffee now with Bitcoin?
You don't buy a cup of coffee with Bitcoin, just like you
No,
don't
but
buy
that's
a
what the
cup of
Bitcoin
coffee with
standard
gold.
is. That's what the Bitcoin standard is, that you would then use your Bitcoin as the currency. That doesn't make any sense. That's like, let me sell a little bit of my stocks to buy a pizza. Doesn't make any sense.
Okay, no, all right,
Why would you want
yes.
that?
All right. All right. All right. He's always got an answer for everything. He's got to make sense. All right. All right. Okay. I get it. You brought up Michael Saylor. Okay. That's my next question here.
Yeah.
This is what I got to live with. You know, you can't play games with Tom. You can't talk to him. He's right about everything. Okay. It's super annoying. All right. That's why I like to talk to Samantha Barley because she's wrong about everything, you know, and then I get to be the Tom. Hi
She's
Sam, I
talking
love you.
chess with me too.
Please don't be upset. Yeah, to play chess with Tom. Tom came up with all the anyway. Michael Saylor says one of the reasons he put $1 billion into Bitcoin is because he looked at the treasury and he realized he was losing 18 to 20% a year, right? Once COVID hit, due to inflation or the value of the dollar or something like that. Was he wrong?
No, he's right. The percentages that he talks about, I think, are for show, because the actual devaluing of the currency is relative to the other assets that you have, or other assets or currencies that exist. But let's take it at face value. Let's say it's even decreasing at 2% per year, which is what central banks target as their inflation rate. That means if you have $100, it's worth $98 by the end of the year. So he's like, well, why would I have a bunch of money in currencies when they're trying to make it worth less? So it is worth less as far as it compares to those assets that inflate in value, right? If he had $500 million in his treasury and they were in Spider-Man comic books, then he's not worried about the 2% decrease. He wouldn't be like, well, my Spider-Man comic books are depreciated by 2%, but they're not, right? Because the assets increase with inflation or even beyond it. So if you buy the S&P and the S&P goes up 20% of the year and inflation goes up 2%, well, then you made 18%. That's what he's sort of saying. Just having cash is like having an asset that doesn't increase in value and that definitely decreases in value, at least in its purchasing power. But he's speaking on aggregate, right?
Mhm.
Inflation in housing prices could go up way higher, right? It could go up 30%, whereas inflation in cars maybe goes up 5%. But he takes an average cost, and that's what he's talking about there. But yeah, that's why actually we're going to be talking about more and more in our Telegram group, this idea of that owning assets is really what you should be doing. Appreciating assets that help you offset inflation and that allow you to generate loans that you can then use to purchase other assets that go up in value. And you can, in that way, you can have, Michael Sutter talks a lot about this, you can have your assets that you purchase actually pay the interest on your loans and help you accumulate more assets. It's sort of like, what's the line he uses? Rich people use their assets to get more assets. But if you don't have any assets, well, then you're screwed, because people just go, okay, I'll just work more hours per week. Well, good luck, because you could only do like 100 hours a week before you like kill yourself. So I was at a Bitcoin event recently, and I was talking to some people, some programmers who made websites like I did, and they're like, they have all these tricks. I do this to make websites, and I make to make money on websites, and I do this, I do that. I sell this, I sell that. I chose these clients, whatever. I go, that's great. I assume you're looking to make 6 figures per year making websites, right? Ultimately, that's what you would like to hope for, a nice, comfortable existence. Yeah. I go, how many websites would you have to make per year in order to make $100,000? They're like, oh, a lot. Okay, so you do accept that just à la base, you're never going to make enough websites every year to make $100,000 per year. You know that, right? You're going to have to do something else to do it. And they're like, oh yeah, I guess you're right. I go, it doesn't matter how many hours you work. You're gonna have to do something that scales it. You're gonna have to build a theme for a website that you can sell several times. You're gonna have to have a support plan that you can scale out to multiple people. You're gonna have to do something to other than just build websites. And I go, so when you build a website, just in your company, you build a website, and let's say the site costs $5,000, right? Let's say you're an employee in the company. So you make after taxes, let's say you're making $1,500 on that website, because the company has to pay taxes and have to take their cut and all that. So you're getting less than the company, even though you're doing more of the work, right? Mm-hmm. You're doing 90% of the work, and the company gets basically the same as you. The client is getting an asset right now that's worth more than what they paid for. That's why they bought it. They think that $5,000 website is going to make them $100,000 over the next 5 years, right? So you're making the least amount of money in that stack and put in the most amount of effort. And this is the system you want to be in order to make 6 figures in a year? Okay, let's see. Let's see how. I've only been in the industry for 12 years. Never seen it happen. You don't see rich grunts. Oh, I make $100,000 a year, and I make 150 websites per year. What? You're working in your sleep? That's never happening. It's ridiculous. But people do that all the time. Okay, I work at this job. I work in this call center, or I work as unless you have some job that scales that pays you a lot of money, right? You're in a hole. You're going down. Like, you're making, unless you're buying assets. What rich person have you ever heard who didn't have a portfolio of assets? Who didn't own any assets? It doesn't exist.
Someone got lucky.
But they never tell you that after school, step 1, buy assets. Step 2,
right.
Don't sell the assets.
That's right.
Use the
you got
assets.
You got a job, you bum. Go work hourly wages, okay? Yeah, you're contributing your time and energy towards someone who's going to use your time and energy to make way more than what you're making, but don't be a lazy bum, you lazy bum.
Exactly. Oh, you work 40 hours a week, work 50 hours a week, for 60 hours a week. You'll make a little bit more. Yeah, good luck.
Assets are increasing in value, okay?
You can really pay off your credit card debt with your extra
that's
hours
right. That's right. You're not buying a house anymore. Prices are going through the roof, okay? We haven't even talked about that, about those, Blackstone, whatever companies buying up all those houses. It's insane. It's insane, That's where the real money is, You got to get big enough, strong enough to be able to screw the little guy, right? And that's how you win. That's what I'm learning. That or Bitcoin, okay? That or Bitcoin, whatever you want to do. I have so much more that I want to talk to you about. We won't do that here. We're going to be jumping over this week into our Telegram group. Jumpstart Live over on Telegram. Become a patron of Happy for a Change, $5 US a month, okay? What are you doing with those US dollars, okay? They're depreciating or inflating, who knows, okay? Send them over to us, okay? You're going to put your money to work, coming into the Telegram group. You're going to find out where you've been wasting your time, where you can spend your time, what you should buy, where you should go. It's not financial advice. It's just opinion that we're providing you, that Tom's providing you, that we're providing you, but it's going to serve you really well. So head over to Telegram. I posted the link in the chat. I'm just going to put it up on screen here, so you can see it right there. It's a garbled mess. Jumpstart Live over on Telegram. The link is down below. And we'll be happy to answer any questions you have. There are no stupid questions, okay? I might have stupid answers for you, but Tom, he'll set you straight. I was building a website for myself, for my own thing, like a year ago. And, Tom's building Tom built websites. So I was like, hey, Tom, help me out with this. And he was like, Peter, I mean, people don't go to websites anymore. Like, very few people go to websites unless you have something special there. I mean, just build up your social platform. And I was like, I've been working on my website for 6 months. You tell me I gotta let this go? Okay, I got the design exactly the way I like it. It's like a justified left, and I
No
got the
one
right
cares
pictures.
about any design of
It's
a
like
goddamn
nobody
website.
cares. Nobody
The only
cares.
people I know who care about the design of a website are website award websites. Oh, a beautiful, beautiful website. Yeah, right. That's like telling someone, "Oh, you have a beautiful outfit." Well, if they wore that outfit for 3 years, you'd be like, "Get rid of that goddamn outfit. I don't care how nice it is."
That's right. That's right.
It's like, Cynthia, are you still wearing that volume dress? I look great inside of it. Doesn't it look great?
Gotta get my money's worth. You'll find all kinds of great stuff. Plus, we have a lot of fun. Head over to our Telegram. $5 gives you access to all our Telegram groups. So we got the Jumpstart Live. Tom's going to be creating one for Sacred Profit, I believe.
We'll talk
Talk about that
later.
And I'll be creating one. I've created one for my motivational speakers. So if you want motivation, you want to get going, you want to feel high on life, you want to get that fire going, we got there for you. So head over patreon.com/happy for a change. $5 USD opens up a whole new world for you, and it will help you out. There, I've made the sell, I've made the pitch. Tom, you've been great today. You're on fire, man. You're really good, man. You got me all stimulated.
Well, when Sacred Prophet talks about holy money, you know you're in the right place.
I love it. Life is the highway. I'm all right. My name is Peter Hartman.
I'm Tom Hartman.
And you're watching Jumpstart Live. Bye, folks. Take care. In the street.